Morning doctor, my name is Gui Xiaoxuan, matrix number 281444. I will present the introduction and conclusion part. First, in accordance with the Oxford English Dictionary, scandal defined as an action or event regarded as morally or legally wrong and causing general public outrage. Secondly, Mahindra Satyam, which formerly known as Satyam Computer Service, which under Tech Mahindra, is the fourth largest IT business process outsourcing service provider in India. The company was established in 1987 and located in Hyderabad. It offers international cooperation, IT consultancy, outsourcing and back office processing services. For information, Satyam means true in Sanskrit language.
Hello and Assalamualaikum. My name is my matric number is 280342. So now I will explain on the details of the scandal. In 2009, the Satyam scandal exposed when the chairman Ramalinga Raju confessed to messing with the company's accounts and he was found guilty of a 1.1 million accounting fraud. Raju had inflated cash and bank accounts of $1.04 billion compared to $1.1 billion in the financial statements. Next, there is a total of $77.46 million in accrued interest that was never exist. Next, Raju provided for an understated debt of $253.38 million on account of funds. Other than that, there is a $100.94 million overstated debtors account compared to $546.11 million in the financial statements. 10 people were found guilty in this case, which are: first, Mr. Ramalinga Raju, the chairman and also the founder of Satyam Computers. Next is Rama Raju, the former manager director of Satyam. Next is the former chief financial officer of Satyam Computers, and 3 former employees of Satyam Computers. There is also a former internal chief auditor involved, and from PwC, PricewaterhouseCoopers, there are 2 auditors involved.
Then, Satyam's audit firm is PricewaterhouseCoopers (PwC) since June 2000 until 2009. It is one of the 4 largest international accounting firms, or more known as Big Four.
The Satyam scam lasted years and included both balance sheet and income statement manipulation. Other than that, PwC was paying twice as much as other companies for the audit. This is actually has raised suspicions that PwC was involved in the scam. PwC was responsible in auditing the company for almost 9 years and still failed to expose the frauds, while Merrill Lynch disclosed the fraud in just 10 days as part of its due diligence. This could mean either gross incompetence on the part of the auditors or complicity with the company in the scam.
In 7 January 2009, Mahindra Satyam has been guilty of accounting fraud for years, as its CEO Biraju Ramalinga Raju admitted to misreporting the company records $1 billion to investors. The Satyam scandal highlights the importance of securities law and CG in emerging markets.
Good day, doctor and everyone. My name is Song Kai Ka. Next, we will discuss about the role and involvement of the auditor in these cases. As an auditor, PwC should detect the illegal acts and disclose to the public. In this case, the chairman of the Satyam inflated the company account, exaggerating the company earning and the size of that in recent years. And finally, the matter became unresolvable. The audit work will go smoothly if the professional skepticism and due care are maintained. The audit work of PwC India did not include the technical skepticism. They also did not conduct the verification procedure and instead relied on the Satyam on statement because they are fully trusted on the former of CEO and executive teams. As a result of the audit failure, the majority of the customer as well as the company itself has suffered a significant losses. Besides that, audit protocols are missing. The SEC and BKAA both said PwC India does not conduct audit. The Satyam audit work has been full of legalized and quality control deficiencies over the year, which occur at all stages of PwC India entire audit work. As we all know, the corporation will primarily report its sales expenditure, tax reduction, cost of goods sold, and research and development costs and other expenses. However, PwC does not detect the source of revenue of the company in the financial statement, and merely accepted the Satyam financial result. Let's see, PwC did not have a relationship with other companies in Satyam that ensure the PwC provide a fair audit report for the public. PwC provide an unbiased and professional opinion on the Satyam audit report. However, since the accounting firm appointment and remunerations are determined by the shareholder general meeting, the accounting firm is not impartial in order to maintain a positive relationship. According to the piece in 2016, the auditor are required to provide a shareholder with an independent and truthful professional opinion on the financial statement. In order to investigate fraud objectively, the auditor should perform the procedures that are independent of the client. Since the lack of the independence of the auditor made it impossible to conduct a fair investigation, the auditor should be independent of the client company in order for the audit opinion to be unaffected by their relationship. During PwC's 6-year audit of the Satyam, no false fact totaling more than 1 billion was discovered. This is due to the strong customer relationship, which has a significant effect on the auditor and accounting firm. The accounting firm may trigger a lack of accounting independence. In order to preserve a successful customer relationship, we can confidently speculate that PwC uncovers Satyam fraud, but PwC is not an impartial auditor and is complicit in the company fraud.
Hello guys, I am Wei Jingrong 280605 and now I'm going to continue the presentation of the auditor law in case Satyam scandal. So, reasonable assurance. As an auditor, PwC should perform audit process and provide relevant, reliable, and sufficient audit evidence as well. So those financial documents in Satyam should be inspected by PwC so the audit process and evidence are reliable and trustable. PwC should asking for the independent sources from outside entities to verify the information in financial documents. So once PwC to do so this fraud can be exposed immediately. The next auditor law is identifying the error and fraud. PwC as an auditor has the role to identify the misstatements is an error or a fraud. Based on oral evidence from chairman of Satyam, a huge amount had been falsified in several forms. Thus, we can recognize this case as a fraud because it is a misstatement did intentionally. The audit opinion of PwC cannot be referred because PwC even didn't detect and identify the fraud. Another auditor law I want to present is professional skepticism. This auditor law can be assumed as an attitude to alert towards the misstatements. Obviously, PwC is poor professional skepticism in this case, even though Satyam did the fraud in huge amounts and fudged the accounts for many years. But PwC still didn't detect it. So PwC should detect it more strictly because the detection risk is high, and it means that PwC didn't assess the audit risk to relevant level. One of the reasons that PwC has poor professional skepticism in this case is PwC affected by halo effect. Halo effect is the tendency of an impressionist, either a person, a company, or a brand in one area to influence others' opinion in another areas. In this case, Satyam is a big company and significant in India, so PwC didn't aware of the possibility of fraud in this type of big company, and PwC didn't suspect with such a huge scale of fraud, which was actually never heard before in history of Indian corporate.
Daughter, I'm Benny Noe. My metric number is 280280717. Now I want to continue present the part professional skepticism. In this case, Satyam claimed to have 1.04 billion in non-interest-bearing deposits on the balance sheet, which is a particularly troublesome project. If any company have this money, they will return the extra money to their shareholders or do an investment into interest-bearing account. For auditors, a large amount of cash is originally a red flag. However, PwC, who is experienced in auditing, did not find these red flags. They did not independently check with the bank for the existence of deposits and only relying solely on the account books prepared by the company. Not only that, but Satyam also paid audit fees to PwC, increased nearly 3 times between the year 2003 and 2008. We can conclude that PwC does not carry out their work with an attitude of professional skepticism, and maybe PwC and Satyam have reached a consensus to conspiracy fraud. Fraudulent financial reporting is an intentional misstatement or omission of amounts of or disclosures with the intent to deceive users. In this case, Satyam reported the fake amount of several items on their balance sheet. We can see that Satyam overstated the amount of cash and bank balance, accrued interest of bank fixed deposits, debtor, and also omissioned the liability. These actions resulted in the overstated revenue and operating profits. The auditor PwC, who did not use an independent testing mechanism but instead used Satyam's investigate tools, This already compromised the reporting standards. This situation was showing that PwC does not dissect the financial transaction of Satyam.
In conclusion, we can summarize that external auditing is a crucial section in supervision of financial activities. And once there is a problem with the audit, it will also harm the interests of many parties. Auditors are vital to the financial industry because the reliance of external parties on auditors to enhance the reliability of financial statements. In the past few years, Big Four have often suffered the impact of audit scandals and triggering strong appeals for reforms. In this case, critics arose because it still has division in focusing the relevancy and accuracy of financial data. Lastly, in accordance with the development of integration of the world economy, auditing firms in various countries have also penetrated each other, which has brought about increasingly fierce market competition. Therefore, the threats and temptation faced by the professional level of auditors professional ethics, and audit independence in various countries will be more obvious and the challenges will be greater.